How's everybody doing tonight? What's up? What's up? What's up? Nah, no more pizza. What's up, guys? Who do we got here joining us tonight? My usual fam, my usual crew. We got Smoke, R. Hirsch, my man. What's up? Tony Williams, Glenny Trades, Flip, Zach. What's up, guys? Let's see. We gotta get rid of this. Play stupid games, win stupid prizes.
Swedish people.
What's up, guys? Bo Willard, my man R. Hirsch, bro. He never misses a stream. Never misses a stream. Andrew, Sean Miller, William, Paul, Frank Sbarra, Jacob, William Danforth, Nick Lowry. I always say it like that. I can't help it. What's up, everybody? Zach, Young Heo, Steven Johnson. Yo, what's up, Steven? What's up, guys? How's everybody doing tonight? We've got a real special live stream tonight. You guys don't know what you're in for, but it's gonna be one hell of a live stream. We've got a surprise for you guys tonight. How you feeling, Jason?
Pretty good.
Guys, we've got an awesome stream tonight. I'm telling you, guys are going to have an absolute blast. Okay? You are going to have an absolute blast on this live stream. We are going to have a lot of fun. Okay? What's up, everybody? Everybody that's tuning in on YouTube, that's on Twitter, Twitch, Facebook. Everybody, what's up, guys? Yo, Raiden from Facebook, what's up? I see you. Kyle Kelly from Twitter, joining us from Twitter. Kyle, what's up? Jason joining us from Facebook. Robert Leake from Facebook. What's up, guys? I love it. I love this multi-stream platform. What's up to everybody joining us on these various channels? What I will say to all of you, if you have not done so yet already, make sure that you follow or like the channel that you are viewing the TTG fam on. Mike Duraco, what's up, brother? I see you. Erickson, Fausto, what's up, Fausto? How are you? G. Dozier, Rodrigo, my man. Flip, what's up, guys? What's up? What's up? So we had a nice day today, guys. 2 for 2. 2 for 2 for me today, trading VVPR, VIVE. And I'm going to be looking, we're going to be recapping that trade. Nice. WB Capital, 35% on VVPR. Nice. Very nice. Volkill, it's my pleasure. Volkill says, first time here. Thanks for your service and hard work. Volkill, it is our absolute pleasure, man. I'm telling you, it's our absolute pleasure. Love this stuff. So like I said, guys, if you haven't done so already, especially you guys are on the YouTube channel, make sure you subscribe to that channel. If you're on Twitter, if you're on Facebook, you guys make sure you follow the channel, like this video, share this live stream across your own social media platforms. All right, let us know how much you guys appreciate all these live streams, the Q&A sessions that we do, and of course, the educational, technical, and mental lessons when it comes to trading, stocks, options, day trading, swing trading. Let me and Jason know you guys appreciate the effort that we put into this because it's all for you guys. It's all for you guys to help make you better and more consistently profitable traders. And we have a little bit of a give back tonight. We've got something real special in store for you. Jason is, I don't even know. Guys, I don't want to give away too many hints. But Jason is going to do something live for you guys here tonight on this live stream that he is not happy about, but I think all of you are going to get an absolute kick out. Look at his face. Oh, man. All right, guys, listen up. Okay, so Yes, Justin Fox, $7,000 today on some Alibaba calls. Very nice. I did well today, Justin. 2 for 2 today. 2 for 2 for me today. Yes. All right, so guys, like I said, so you're in for a real treat tonight. Jason is going to do something real special for you guys. Okay, going to do something real special for you guys before we get this live stream started. Okay, I'm going to be recapping VIVE. I made a little bit of money on VIVE. Most of my money came from VVPR today. We're going to talk about that. SPY, okay, NASDAQ, new all-time highs today on the overall markets. You had a shakeup in the Dow. A couple of big familiar names like ExxonMobil gets taken out of the Dow. So you had a little bit of a shakeup in the Dow. We can maybe talk about that. But really, we're going to be talking about recapping my 2 trades today, going 2 for 2, trading those stocks, how I managed risk on those plays, okay, how I was able to manage risk on those 2 stocks. And then we're going to talk about all-time highs on the SPY. And I'm going to talk to you guys about a potential swing trade setup that I'm looking at in one particular stock that I'm going to share with you guys here tonight on this live stream. And then Jason, the Wolf Spatafora, has something real special that he's going to do for you guys. All right. So before any further, I want to open up the floor for a blanket Q&A session, same way we do each and every single live stream. I open things up for a Q&A. You guys have the floor. Yo, COVID Steve, what is up? From Twitch. Andre Hall from Facebook. I love it. Jacob Nelson from YouTube. I see all you guys. What's up? Tom Anthony, very nice. Long-time listener, first-time TTG member. Boom! Tom Anthony, welcome to the family, brother. Says long-time listener, first-time TTG member. Looking forward to it. I'm looking forward to trading with you as well, brother. Welcome to the family. Welcome to the family. So, all right, guys, like I said, we're going to start things off here with a blanket Q&A session. You guys have the floor. Fire away. Ask me or Jason any questions that you guys are interested in, whether it's stocks, options, large caps, small caps, whether it's about TTG. Majenki from Twitch, what's up? What's going on? How are you? I see you guys. Carice, I'm doing well. Chad, what's up? All right, guys, so again, fire away. Ask us some questions. We're going to give some time for people to log on. All right? Oh, Michael Edward, Jacob Nelson from the YouTube channel says, Michael Edward, tell me your thoughts on the 3-bar play. My thoughts on the 3-bar play. I don't use it. I don't trade off it. I assume you're talking about the 3-bar play as it refers to on the daily chart. If you're referring to on the daily chart, people say that stocks move in threes in 3 days. When the stock makes a move, it moves for 3 days. I'm not a big component of Eric Bartolotta from Twitter. What's up? My thoughts on SPACs. We'll get to that in just a second. I want to just finish this one question up real quick. I don't really look for the 3-bar play, guys. I'd much rather see you focus on levels and technical setups and and focusing on your levels. Okay. The 3-bar play is something that you can use kind of as a gauge, but I wouldn't rely on it, like the holy grail of trading. Okay. Because, the theory is that when a stock makes a definitive move, it moves in 3 days. Okay. Now, sometimes that's true. Sometimes it's not. You can have a stock that makes a 1-day move or a 2-day move. And if you're not taking profits off when those levels are reached, like I would rather see you guys focus on levels that are on the daily chart or on some longer time frame chart, identify resistance levels if you're long or support levels if you're short, whatever. But I'd rather see you identify levels based on resistance and support and the overall setup rather than just waiting and basing it on time of a move. Okay, because you can have a stock that could go from $10 to $15 in a single day. And maybe that $15 level is a major resistance level. And if you're trying to buy that stock and you're trying to play it for that 3-day candle move, you might miss a wonderful opportunity to take some profits off at the $15 resistance level. So I don't necessarily use that 3-candle rule in my trading. What I do use it for is to help me identify and get on the right side of a trade. So if you have a stock, for example, that's in a consolidation phase, and there's one stock in particular that is in a consolidation phase that broke out of that consolidation phase today that I'm looking for a swing trade follow through move on. And this would be an example where we can talk about that 3-day candle rule. And that is that when a stock breaks out of a consolidation, typically moves for 3 days. And you can try to swing trade that off of that concept. So what I'll look for is, instead of relying heavily on the 3-day candle rule to take my profits, what I will do is rely on the 3-day candle rule to help me get on the right side of a trade. So if I see a consolidation pattern on the daily chart and then we get that breakout, then I'm going to say to myself, okay, knowing that a stock, that 3-day candle rule, using that theory and using that strategy, if the stock has just broken out of a consolidation phase with a good volume breakout day, this could be a safe place, a stock that I can look to get long tomorrow, which would be day 2 of that move, which would give me still plenty of upside. And that's where I'll go and I'll use, that 3-day candle rule, when I'm looking to get myself into a trade, or maybe to get myself into a swing trade by using that 3-day candle rule. But I will not rely just heavily on that 3-day candle rule to take my profits. My profits are going to be identified based on resistance levels that I see on the chart. And that's when I'm going to go ahead and I'm going to take profits. I'm going to rely on my technical analysis rather than the 3-day rule to take profit, but I could rely on it to help get me on the right side of a trade or to enter a swing trade. Okay. So those are my thoughts on the 3-day rule. Okay. Now, somebody else asked me, what are my thoughts on SPACs? They're red hot. They're red hot right now. Okay, SPACs are red hot. It's become the new craze. It's become the new craze going public. And I think they're hot. I think they're red hot. I think they're great vehicles to trade. They give you tremendous volatility and they give you excellent trades. So I'm a big fan of SPACs, and it's becoming increasingly more popular way for companies to go public. And I think that it's something that you guys can absolutely keep those SPAC plays on watch, because the moves have been fantastic. The volatility is tremendous. The volume is amazing, which is surprising. Usually the volume is, you would expect volume to be a little bit lighter on some of these names, but they're not. They're lighting up the board. And I'm a big fan of SPACs. Okay, especially as a trading vehicle. I'm a big fan of SPACs. Nice. Thank you, Jacob. Jacob from YouTube says, right. Thank you. This is why I'm so grateful for my TGD family, Michael Edward, more than just a crutch or extra confirmation. Thank you very much. Anytime. It's my pleasure. Yep. Eric Bartolotta from Twitter says, yep, SPACs are gaining a lot more attention. Yep. Johnny B says, when did this start? Johnny B, you didn't miss much, brother. We just started about 14 minutes ago.
We've been here like 2 hours.
Johnny, we just gave away our special secret.
You missed it. Catch us next year when we give it again.
Yo, A. Cole, what's up? Sean Miller, what's up? Next question, we've got Lumi Span says, what are SPACs? Okay, let's talk about that. For those of you that are new, that are unfamiliar with SPACs, are special acquisition vehicles, guys, where basically a money manager, a banker, a private equity, somebody is basically going to have a public vehicle that doesn't necessarily have that the sole purpose of this vehicle is to acquire a company and acquire a business. And that's how they take the company public. So what you'll have an asset manager, money manager, banker, private equity guy, whatever it is. They'll go out to investors and say, hey, listen, this is what I'm going to do. This is my deal. Okay, I'm going to go out. I'm raising money now. Guys, give me money, and I'm going to go out and I'm going to acquire the sexiest artificial intelligence company that I can possibly find and get my hands on, and I'm going to acquire them in this vehicle. We're going to take them public. So invest in me and trust in me to go out there and find that company to bring it into the SPAC. Okay? They only have a limited time frame to acquire a company. I believe it's either 18 or 24 months. I'm not sure. It's either 18 or 24 months, how much time that person has to acquire a company. So investors will give them money, and then they go out, they look for an acquisition, and they acquire that company, and then that's how that business goes public. Okay, so instead of going through an IPO, it's just a different way for companies to go public. But instead of you investing in the company, you're investing in the manager and trusting in the manager to go acquire an attractive company and bring in assets into that public vehicle. Okay, so SPAC literally stands for special acquisition. It's a special acquisition vehicle. Okay, and that's what a SPAC is. Okay.
Yeah, and they got to spend that money that they raise by a certain time frame, or they have to give it back.
Right. Yeah, that's what I was saying. I think it's either 18 or 24 months. I think it's 24 months, but I'm not. It's either 18 or 24.
Well, I think it probably depends on like whatever's written in the prospectus or
Yeah.
whatever.
Yeah.
I saw a question on vertical spreads. No, when it comes to trading options, I'm not doing vertical spreads. I think Toner does that. Debit spreads, covered calls, iron condors. When I'm trading options, I'm just trying to keep it meat and potatoes. I'm either buying puts or calls. The only time I start mixing and matching is during earnings, especially if I think it's something that's like very, very volatile. Like, I'll do strangles on, let's say, Netflix or Tesla or something like that. But for the most part, well, I'd say 99.9% of the time, I'm just doing basic calls and puts. Right now, I'm probably doing 90% calls because that's what the market is pretty much programmed for right now. We actually talked about this the other day. Short interest is the lowest that it's been in 15 years, which is just insane. You're not getting paid to be in puts, it's really that simple. And if you're in puts, you can't have any kind of meaningful position unless you're having, you're buying puts in something that's just complete garbage, like Kodak at $30. Something like that. Yeah. Like, would I hold Apple puts for a week? God, no. Would you hold Tesla puts for more than a day if it burns you? No. So I'm sticking with just basic calls and puts. I'm just waiting for the channels rather than try and guess like, hey, should I go short? So trading the channels has been paying really well for the last couple of months. So, I just stick with that. And people ask me all the time in TTG, they're like, oh, is it time for puts? And I'm like, I don't think I want to be in puts. I'll wait.
Baby, come back.
Baby, come back.
Yeah, guys. So let me just touch upon David Padilla had a question. David Padilla was asking me. We have Alex Campbell is another one of our pro trade moderators in chat. He was asking me, he's like, well, why does he see Alex jump in a little bit before me? Does he take a bit more risk than you? And I just want to touch upon this question just a little bit, guys, about the difference in trading styles and want you guys to understand conservative versus aggressive trading styles. Okay, when you are there's two main different styles of. I mean, there's a lot of different styles, but in regards to what we're talking about here, you have two different styles: conservative or aggressive. Conservative, and this has nothing to do with position size whatsoever. Okay, you can have a conservative trader that has a $5 million account. You can have an aggressive trader that has a $500 account. Okay, so an aggressive style trader likes to buy stocks on breaks through resistance levels. They like to short stocks on breaks through support levels. A conservative style trader is the opposite. A conservative style trader likes to buy on pullbacks into support and likes to short on bounces into resistance. Okay, so the main difference between conservative and aggressive style has nothing to do with position size. It's all about where you enter trades on the setup. Because now, like, for example, Alex and I, we both traded VVPR today. Okay, we both traded VVPR today. And a conservative style trader, we can trade the exact same stock, but we'll enter that trade at completely different points in the price action because I'll wait for the pullback into support to get long. Alex will wait for the break through resistance to get long. And that's the main difference when it comes to a conservative style or an aggressive style trading.
All right, I see a question I need to answer.
Go for it.
Somebody asks, Neo, or they said Wolf is. I missed Neo calls this week. Meat on the bone left. No, I mean, if you want to, you could, break that bone in half and suck out the marrow. But Neo made a 24% jump. Uh, I, it's way too dangerous. You're chasing, and look, you could get another day, but you could also get a really aggressive pullback the second you get in. Neo and all of these EV companies are just, they're blank riding Tesla. Okay. They're eating off of Tesla's plate. I think Neo got upgraded today. I still don't want to own anything in China, especially after Luckin Coffee. So, I think you're probably safer to just buy it if you're that bullish. But I think calls is really pick something else, man. There's much better opportunities because any calls that you buy, it's somebody selling into you. Just taking their profit. And when that profit taking really turns on, it's going to get really aggressive. So, and you like, I won't buy calls if something gaps up like that. If something gaps up $1, $2, I'm not buying calls. I'm waiting for a pullback. And the same thing, if something gaps down, I'm not in a rush to get puts unless it's something material where I think it could be, continuation. And I'm definitely not going like puts out of the gates. I'm looking for that little dead cat bounce before loading puts, give myself a little bit of time and a little bit of a safety net. You should never chase. It's a really bad habit to have. And when you chase, you're being, and I'm going to be honest with you, people that chase to me are the laziest people in the world. Because they heard, oh, their friend got into something. They see, oh, my friend's killing it on this. And they want to try and duplicate that. Well, their friend got into it because they did the work. They were looking at the charts, doing the research, seeing that there was some fundamental reason to be in this. And they're like, oh, let me just come in the end and try and make it. So I don't like people that chase because I used to be like that early on. And I was just like, man, this sucks, And then after I got better at trading and started to understand, a little bit of what was going on, if you look at it, check out all the times that you chase and you'll see like, all right, my winning percentage isn't that good. Or I'm taking too much risk for, such a little move. Except Apple, Johnny B. Or Tesla. There you go, Glennie. You can savor it. Savor it. Savor it one last time.
Colin says, Michael, can you look at how to trade large caps? The EMA and VWAP don't always seem to align with moves up or down. How do you trade these for better entries on or trading options? I mean, I don't think that's true at all. I think the trade line and VWAP align very often. You just might be looking at them over the last couple of days because you've had a lot of choppy action in some large caps, depending on which sector it is that you're looking at. But VWAP, exponential moving averages, they absolutely do sometimes hold true in large caps. And you guys have to realize that, this is something that's really important that I'm going to touch upon on this question, because if you think that you're going to find an indicator that every single day is going to work perfectly, you're just dreaming. It doesn't exist. So sometimes and VWAP is going to hold perfectly. It's going to hold to the absolute penny. Okay. Other times you're going to look at VWAP and the stock's going to go right through it like it's not even there. Okay, so sometimes you'll see VWAP will be in play, sometimes it won't. Same thing with an exponential moving average. If you guys are looking at a trade line, you're looking at like the 9 exponential moving average. Sometimes that 9 exponential moving average, it's going to hold perfectly. Other times the stock's going to go right through it like it's not even there. Same thing applies to Fibonacci retracement levels. Same thing applies to you for those of you that trade off MACDs, that trade off pivot levels, that trade off Bollinger Bands, that trade off Elliott waves, whatever the indicator is that you're looking at. Not a single one of them is going to be in play every single stock. Okay, there's not a single one of them that exists that does that. That's why when I'm trading, I don't look for one indicator to be okay. VWAP is doing this. I'm going to buy this stock. I don't care about any one indicator individually. Okay, like you said to me, Mike, VWAP's doing this. I don't care. Tell me what VWAP, the trade line, the Fibonacci level, and the initial morning high, tell me what those are doing. Okay, because I like to base my trading decisions off of multiple indicators that are all giving me the same signal. I don't care about one particular indicator. There's not one indicator that I like more than the others. Technically, it's just regular volume. Some people don't realize, yes, volume is a technical indicator. And if there was one indicator that I can trade with, someone said, Mike, you can trade, but one indicator only, what would it be? Every day, hands down, no questions asked, it's volume. And I'm going to trade that. That one indicator would be volume because it gives you the most kind of like inside look and understanding of a stock's momentum is volume, and volume can tell you the most about a stock's action. So if I had to pick one, it would be what people mean when people say like, "Oh, Mike, what indicators do you use?" They're not obviously everyone uses volume, right? But I'm not looking at a trade line, a Fibonacci level, a Bollinger Band, a pivot point, VWAP. I'm not looking at either one of those to be the knight in shining armor that comes to show me the way. So you're going to have certain trades and certain stocks that sometimes, like I said, VWAP will be in play, other times it won't. And that's why you never place a trade based off of solely one indicator. Okay, you'll never see me place a trade because one in telling me to get long. Okay, you will always wait for me to say this indicator are all telling me the same thing. Bang, now I'm going to pull the trigger and now I'm going after this trade. Okay, so keep that in mind, guys, when you are trading. And if you are frantically searching online, looking for that one special indicator that you should use every single time, stop. Okay, because it does not exist. Believe me, if there was one special indicator that worked every single time, when I worked at the hedge fund, they would have taught it to me. I would use it in my trading today, and we'd all be trillionaires. But it does not exist, so stop trying to find it. Do you think we have another big rug pull before the election? Oof. Nick Jones says, do you think we have another big rug pull before the election?
What's going to do it?
Yeah, what's the catalyst?
If 20,000 people died tomorrow, nobody would give a shit.
Yep, nobody would care. Nobody would care.
Vaccine news doesn't. I got this.
Go ahead.
Vaccine news doesn't move the market. Executive orders aren't moving the market. What's moving the market? It's tech. Okay. So I don't know if we're going to get I don't think we get a big rug pull. I think that there's just way too much money in the system. Where else are people going to, put their money? Where Powell's not going to raise interest rates. So that's off the table because that would be the only thing that I could see to make the market drop. If with the election, depending on the winner, I think it's baked in either way. If either we're going to have corporate tax cuts gone or not, I think the market has just kind of resolved itself to that. What else is there? Trade war. That's, I don't think we're going to hear anything about that. I don't think they're going to. I think that the U.S. dollar will continue to be the reserve currency of the world. So in that case, deficits don't matter. What can be, what can do it? I don't know. Maybe if we got like 10 natural disasters all in one shot, like if Asia gets like tsunamis and earthquakes and, Fukushimas, and we just get like, 10 storms. And you know what? At that point, people probably won't care either. The market is just kind of programmed itself to just kind of do this, like just show me my P&L. Guys, also understand that 87% of the stock market is held within by 10% of the people. So they're not in any rush to give back that money. And if they are, they're, waiting in the wings. So I don't see a rug pull if we have to re-shut down. But why would, at this point, everything like coronavirus, we're the worst country in the world with coronavirus and handling it, per population, but we don't care. So we're not going to shut down the economy again.
You know what actually might be interesting to think about as we get closer to the election. One thing to consider, if we are still far away from a vaccine, one thing for you guys to listen to is, Trump has made it pretty clear how he's going to be handling the economy and everything, and he talks about not shutting anything down. Biden has actually said that he would shut the economy down again if we needed to. That's actually something to really pay attention to once they get into debates. What some of the topics, because those questions are going to be asked. They're going to be asked about the economy. They're going to be asked about the virus. They're going to be asked about vaccine. A lot of that's going to be asked. That's something to maybe pay attention to, because if people think right now markets are like, okay, the economy, we're not going to close down again. A lot of the other states like New York, New Jersey, that were the epicenter of everything, are still have completely flatlined out. The numbers are very, very low in some of those states. Obviously, you had the hotspot states like Florida, Texas, Arizona, California, where those numbers were kind of got up to the level where New York and New Jersey was. But now that things have kind of switched. And I think people are under the impression that we don't shut down again. I don't think schools and campuses are a big deal. If they don't open schools, some schools are opening, some schools are not. There's actually there's towns right by where I live. They're neighboring towns. They literally share a border. One of them is doing virtual learning. One of them is going back to school. So it's such an individual municipality decision that's being called on schools. Campuses being closed, doing virtual, schools being closed, doing virtual. I don't think that's going to have any effect on the stock market whatsoever. What would have an effect on the stock market is, I think, if there's a clear sign that we're going to go into a complete lockdown again, like a nationwide lockdown. We go into a nationwide lockdown again, then I think you do have a significant pullback in the markets. And I think other things that you want to pay attention to over the next coming months, headlines that could potentially move the market. The fact that we still don't have a stimulus deal and the market's at all-time highs is insane, okay? So obviously, there's not a single money manager in the world or investor that believes that we're not going to have we're not going to have a stimulus deal. They just assume, oh yeah, whenever it comes, we're going to be fine. This is a stimulus-based rally. This is zero interest rates. This is trillions upon trillions of dollars of quantitative easing. This is fiscal stimulus, monetary stimulus. This is also, I think, some pricing in of inflation. I think that has to do with it as well. So I don't really think that, I just don't see the headlines that are going to really create that aggressive rug pull. As long as the as if cases stay where they're at, you're having decreases in a lot of the other hotspot states. So New York and New Jersey have stayed pretty stable since the numbers went down. Florida numbers are going down. A lot of the other states' numbers are going down. They're still high, but they're going down. At least they're trending in the right direction. And there's a lot of hopes of a vaccine. If something drastic happens with the vaccines, here's what could really sell the market off. I think if the virus mutates. If the virus mutates, then I think you see a massive sell-off, and people realize that the vaccines are not effective because the virus has changed. If the virus changes and mutates, and the vaccines are not effective, then I think you see a massive rug pull, because then they're going to have to start all over again to making those vaccines. And then now all of a sudden you went from possibly being months away from a vaccine to being a year and a half away from a vaccine, and that's going to have a major effect on things. So. Yeah. I think that's really the only thing that is going to affect the market. Maybe if there is China trade war headlines start to peek their head up again, which I'm sure they will going into the election. That's one of the topics that that in debates are going to be discussed. There could be maybe certain statements made by Trump and or Biden in their statements, in their advertisements, in their campaigning that may not sit well with China. Maybe China wants to retaliate, poke the bear a little bit. You never know. Okay, but these are things that you want to pay attention to, and kind of keep your ears open to be ready to pivot, and recognize that these are the types of headlines that could potentially cause the market to pull itself back in. But if we're just left to our ways right now, there's nothing that's going to cause. We're not going to just get a rug pull out of nowhere. At least that's my opinion. I think there has to be a catalyst. Something has to change in order for us to get that rug pull. It's not just going to be a technical based rug pull. I don't think so.
Yeah, it's got to be something material. And one of the questions was, well, if I don't think that there's going to be a rug pull, why am I not holding overnight? Rug pull or not, this market is nuts right now. So I'd rather just be safe than sorry. One day you're holding Roku and everything, it closes and you're up and it's great. And then it gaps down $5. We see a lot of that. So I saw another question about pot stocks. There's a question about the differences between Green Thumb and TrueLeaf. Look, Green Thumb and TrueLeaf are dominating in different states. Obviously, Green Thumb is in Florida, but their bread and butter is Illinois, and they're just absolutely crushing it. TrueLeaf is, in Florida and crushing, as is Cureleaf. Those three companies are all pretty different. They're good. Look, those are the three best companies, hands down, in North America, period. That's the quote, all right? Period. The amount of money that they're doing in revenue compared to Canada, it's disgusting, okay? That's why, Canada is just a trade, okay? But to give you kind of an idea, revenue growth, for Green Thumb is 47%, TrueLeaf it's 32%, okay? All right, 15% difference, not bad. But then, okay, EBITDA margin, okay? Green Thumb, 30%. TrueLeaf, 45%. Okay, shares outstanding, Green Thumb, 210. TrueLeaf, 113. And then if you look at Cureleaf, it's 66% revenue growth for 2021. Price to earnings is 7.5. EBITDA margin is lower, 24%. Shares, 533 million. They all have their strengths, but at the end of the day, they're all just crushing it. So, we had a really nice trade in Green Thumb on Friday, I think. Was it Friday or Thursday? So we've just been crushing it. We're just managing those positions. We're in Cresco Labs, Cureleaf, Green Thumb. We haven't taken a position in TrueLeaf, though I suggested it when it was at 19.5. Some people got it. I didn't. Next question.
We've got one question um, from Avi Vaknin. Says, Mike, are you looking at your P&L while you're trading? No, I don't. Okay. This is really important, guys. I don't. I can't see my P&L during the day when I'm trading. Okay. Um, it is hidden from view. I don't see it, and I don't need to see it. Um, and this is something that I think many of you can try if you guys suffer from any of these things. So listen up. If this is you, if you exit winning trades way too soon, or if you end up jumping out of a trade, like you get antsy and you exit even before your stop loss is reached. Like let's say you buy a stock at $5 and you're like, I'm going to stop out at 470, and the stock gets to 480, and like you panic and you exit. If you are either one of those traders or you really struggle with either one of those things, and let's say you're like, you buy the stock at 5, you're like, I'm going to take profits at 550 and 6, and the stock gets to 550, you take some profit, it gets to 570, then it pulls back to 550, and you panic and you exit that position all at once. If any of these are you guys, okay, I would recommend removing your P&L from view. Okay. A lot of traders make the mistake of trading their P&L rather than trading the stock in a chart that's in front of them. And trading your P&L is going to cause you guys to make bad decisions. It's going to cause you to make emotional decisions. What's about Jason? Is it cold in Miami?
Dude, my house is 71 degrees. Totally.
But yeah, guys. So removing your P&L from view is going to help you focus on the chart in front of you. Let me give you guys an example. Let's say your biggest win you've ever had in your career is $500. Let's say that's the biggest win you've ever had. It's $500. Now let's say you get into a trade tomorrow, you're up $600. You're up $600. You're like, oh my God, this is my biggest win ever. The stock starts to pull in a little bit. Now you're up 550. Now you're up 525. You are going to be more likely, if you're staring at your P&L, realizing this is your biggest win ever, you're going to be more likely to get antsy and jump out of that trade while you're up $530 because you want to lock in what would be your biggest gain ever. Even though every single thing on that chart could be telling you that the stock is going way higher. And you're jumping out of the trade, not because the stock and the chart is telling you it's time to exit that trade. You're jumping out because you're obsessed with your P&L, and you're getting out because your P&L is telling you that you should be getting out of this trade, when really the stock is set up beautifully for a continuation move. And instead of you staying in that move and being up 650, 700, 750, you're going to exit that trade while you're only up $525 because you want to lock in the biggest gain you've ever had. So these are things that will affect your decision making. When you're staring at your P&L, okay, that is when greed and fear are going to really play a factor. Now, let's go the opposite side. We'll go the fear side. Let's say you set a stop loss at, like I said, that 470. Okay, and the stock gets down to 480, and you're down like 300, $400, and you're like, oh man, I'm down a couple $100. You know what? This just doesn't look good. This doesn't look good. And you panic and you get out of the trade at 480. The stock goes down to 474, 475. Your support level holds. You never get stopped out, and then stock runs to 550, 575 because that support level ended up holding. And you just panicked out of the trade because you saw you were down 350 and you didn't want to go down more than 400. So you traded your P&L rather than trading the stock in front of you. Okay, so I remove my P&L from view. I don't need to see it. I don't need to know how much I'm up on a trade. I don't care how much I'm up on a trade. I'm sticking to my game plan. I'm sticking to my profit targets. I'm being robotic in my trading. I'm saying I'm going to buy the stock here. Okay, I identify 4 levels before I pull the trigger on a trade. Before I pull the trigger, I identify my stop loss, profit target 1, profit target 2, and profit target 3. And when my stop loss is reached, I exit my position. When my profit target 1 is reached, I take 25% of my position off the table. Profit target 2 is reached, I take 50% of my position off the table. Profit target 3 is reached, I sell my final 25% of that position. Now, I don't need to see how much money I'm up. Okay, I don't need to see I'm up $3,000, $5,000, $7,000. I don't need to see that as the stock is working its way higher because it doesn't matter. Whatever you're up, you're up. That's more money than you had before you entered the trade. That's your job as a trader. So identify opportunity and make money. Great. You don't need to see how much you're up. Trade the chart in front of you. Stick to your game plan. Don't trade your P&L. Trade the chart. Okay, and a lot of traders make the mistake of focusing on their P&L rather than the chart that's in front of them, and that can cause you guys to make emotional decisions. When you trade with emotions, you make mistakes. When you make mistakes, you lose money. All right. Let's see. Let's see. Next question. Yeah, see, there you go. Bo, he knows. Bo's like, yeah, locking in a record trade got me a few times. Yeah, exactly. Exactly. Glenn says, Mike, stop talking about me. All right, let's see. Next question.
Let's get to the shaving. Not many rush.
Oh, here's a good question. Here's a good question. Kenneth Dixon from YouTube says, Mike, do big sell orders ever scare you on an A setup? Ever since I started paying more attention to level 2, big sell orders, real or fake, I chicken out. Advice on what to do in this scenario. Kenneth, my advice to you is this. I will never buy a stock or sell a stock because of one big order. One big order is not going to completely change the direction a stock is going to go. Okay? Now, if a stock is going to go higher, just because there's one person selling 50,000 shares does not mean that all of a sudden the whole rest of the world is going to decide they no longer want to buy the stock. If a stock's going up, the stock will go up. If a stock's going down, the stock's going to go down. And not one single sell order or buy order is going to change that. If a stock is going to go down, I don't care how big of a bid pops up at $5, you don't just buy in front of the big bid thinking the stock's just going to magically reverse and run higher just because there's a big buy order. If a stock's going down, it's going down. If it's going up, it's going up, and one order is not going to change that. So you will never, ever, ever hear me say, oh, guys, big bid, I'm buying. What I will do is say, okay, guys, the VWAP has been holding support all morning. The trade line's working its way up. It currently lines up with the initial morning high and the 23.6 Fibonacci level. If we get a trade line VWAP cross here, look for support at this $5 level. I'm going to try to be a buyer in front of $5. Now, let's say that stock pulls in towards $5 and we get down to 510, 505, and all of a sudden there's real big bids that are popping themselves up at 503, 505, 507. That's great. But that's not the sole reason I'm buying the stock. I'm buying the stock because of the pattern, the chart, the analysis. The orders are just confirming what I see on the chart. I use level 2 to confirm support and resistance levels that I see on the chart. I don't try to identify support and resistance inside of level 2. If you're trying to identify support and resistance just by looking at level 2, you're setting yourself up for complete and total utter failure. Okay? Now, what I will add to this, and this is something that has happened in the last month and a half, I believe. I did a lesson about this on the YouTube channel, actually, which was identifying institutional sellers on level 2. And what I will do is use my level 2 sometimes to identify a lazy institutional seller, which is someone that has a very large position in the stock that probably gave the company money a year ago, 2 years ago, 3 years ago, and is taking advantage of this liquidity event, this press release, this gap up, this stock's trading millions of shares when it normally trades only 100,000. They're taking advantage of this liquidity event and they're going to sell their position. What that will start to look like, how I'll identify that institutional seller, is if you have a large offer that comes in inside market. What inside market is within the bid and the ask spread. So if you've got a stock that's trading $6 by $6.10, your spread is 10 cents. Okay, so if you have, if $6.10 is a low offer in level 2, and you have a huge seller for 30,000, 40,000 shares, plops themselves right in at 610 or 609 or 608 or 607 inside market, That's a very aggressive move by that trader saying, I want to get filled on this position. I want to get filled on it right now. That's why they're coming inside market. If the stock is 6 by 610 and they come to 615 or 620, they're not in a rush to get out of that position. There's also a chance that order could be fake. Now, if a trader comes in 609, 608, 607, etc., that's them saying, I want to get out. I want to get out of this position right now, because any market buy order is going to fill them if they're inside market. So you're going to want to look for those type of movements by a trader. And now, just because I see that one time is still not enough to say, whoa, guys, hold on a second, institutional seller. One big sell order is not going to do that to me. But if someone comes in a situation like that, 30,000 shares inside market, they get bought, they get bought, they get bought. The stock goes from 610 up to 615. Now we're 611 by 616 offer, and then bang, another 35,000 shares comes in at 614 inside market again. Now I'm going to say, all right, hold on a second. Similar size, large offer, inside market, very aggressive movement by that trader. This is something I need to now start to pay attention to. Let's say it gets eaten up, gets eaten up, gets eaten up. That order gets filled. The stock goes to 620. Bang, another 30-something thousand shares at $6.18 inside market. At that point, I'm going to say to myself, I'm lightening my position because we have a very large institutional seller that is aggressively trying to get out of their position. That's an instance where I will use level 2 to say, okay, it's time for me to pump the brakes a little bit and start to ease myself back, because I don't know how much, okay, that trader still has to fill. And that's when I'll start to get a little hesitant when I see aggressiveness like that. So that's something that you guys can look into. All right. All right, let's see.
Do you recommend trading low float stocks as opposed to large cap stocks? Look, you got to know what you're getting into with a low float.
Right.
That candle burns bright, but it does not burn long. All right. So, that is trading a low float stock, especially one that comes out of nowhere. You got to realize that, this isn't one that you trade with a PDT rule. This isn't one you trade where you're like, all right, I'm going all in, and then you drink the Kool-Aid and then you're holding overnight. What is it? Bulls take the stairs, bears take the window. So you got to be very careful. Those things are going to move around a lot on you. You got to be doing it with hotkeys. Unless you're getting into a low float stock, like I'm in a low float stock right now, but I've been in it for, 6 months. It's a marijuana company. It's called Power REIT. And, that thing's a super low float. You breathe on it, that thing goes up. You sell, the thing goes. Somebody sold 100,000 shares the other day, and the thing dropped like $3. So you just have to kind of be, low float stocks are not the stocks that you want to get FOMO. And at the same time, like the big cap stocks, those are the ones like you want to build a position and own them. You don't want to worry too much about the day to day. So you want to go into them while there's still real good value in them. Like I like Tesla. I like Apple. I'm not in any rush to buy Tesla or Apple. I think that there are other sectors that are have been hammered since COVID that have yet to have their day in the sun. That's the advice I'd give you.
Yeah. Guys, I don't have I don't tell people, one or the other. I trade both. I trade small caps. I also trade large caps. It's just a matter of personal preference, honestly, at that point, guys. It's, it is, it's just a matter of volatility,
because I know you trade small caps and some of them have low floats. Tell them how crazy. Mike comes on the mic and says, "Look, this thing is gonna. You better be ready for this."
Yeah, yeah. It's very important for people to realize the risk of the trade that they're entering. And I think this is probably one of the biggest downfalls, I think, of new or inexperienced traders, is not really being able to gauge the actual risk of the trade they're entering, whether it's a large cap, a mid cap, a small cap, a low float or a big float, or an option trade. They don't really actually understand the risk that they're taking on that trade. And I think that's one of the biggest mistakes I think that new inexperienced traders make. So you guys will always hear me come on the mic whenever I'm trading something that's going to be a high risk trade, something that's real high volatility. And I'll always tell people, guys, understand the risk of the stock, of the trade you're about to enter. Understand the volatility of the stock that you're about to enter, and adjust your position size accordingly. Just because the stock is moving around very quickly does not mean that you have to, does not mean that you can't play it. It just means reduce your position size. Reduce your position size. That's all. Reduce your position size so you can take advantage of that price action. I'd say that's probably the most important part, is that people don't realize the risk of a small cap or an option trade. Not all options are created equal. Not all small caps are created equal. Not all trades are created equal. You guys have to understand the risk of the stock that you're entering. All right. Let's see. All right, guys. Okay, so I think that wraps up, I think, our Q&A. Our Q&A always goes longer than I initially say it's going to, all the time. It's crazy. I can't believe that was an hour. We just spent an hour going over questions. It's crazy. It's crazy how time flies. It really is crazy how time flies when you do this Q&A. So what I'm going to do with you guys now, okay, I'm going to recap. Okay, I'm going to recap my trades here from the day. Let me pull up my executions on Lightspeed. Okay. All right, guys. So what I want to do now is I want to show you guys, we're going to go over and we are going to recap, okay, my trades from the day. 2 trades today. I was 2 for 2. VIVE and VVPR are the stocks that I'm going to talk to you guys about. VIVE was a small gain. VVPR is really where I made the bulk of my money today. But nonetheless, VIVE was a nice trade too. And I was able to pull some profits out of that. So I'm going to recap these 2 trades with you. And then later, Jason's got something real special that he's going to do for you guys. So you guys want to make sure you stick around here until I'm done with these recaps. So let's talk about VIVE first. A lesson I want to go over with you guys on VIVE specifically is how to use halt prices in your trading. Okay. You will hear me talk a lot about initial morning highs or prior high of the days. Prior high of the days, initial morning highs, when those levels are broken to the upside with an increase in volume, you can look for those areas to then start to act as support. The same could be applied to halt prices. When a small cap stock halts and then reopens from that halt on a big gap up and a huge push on a huge volume surge, when the stock pulls back in, you can look to see if that previous halt price begins to act as an area of support. Okay? Do not just go in there and start buying in front of halt prices. Look for other indicators to also coincide with a halt price. And that's when you can look for a support level at that halt price. VIVE is a perfect example of that situation for me today. VIVE was on the watch list today. We had the big gap up. We shot higher and immediately halted. This stock halted within the first couple seconds of the stock market opening. halted right there at 105. Once the stock reopened from that halt, it shot right up to 130 and halted again. So once the stock halted again here, you now have a prior halt price. And this prior halt price is what I'm saying can sometimes act as an initial morning high. And what you would look for on an initial morning high would be other indicators to line up at this price point to create an area of support for you. So let's go and let's draw a line right across that prior halt price at 105. There it is. Okay, I just drew a line right across that prior halt price at 105. The stock reopened off the second halt, pulled in, and then halted again. We actually halted on the way down here. So now that we have a high of the day, here's your high of the day. Okay, now that we have a clear high of the day, well, now I can take out and I can draw out my Fibonacci retracement levels. Okay, now you can take out and you can draw out your Fibonacci retracement levels. Okay, so now that I've got my fib levels drawn out, now we're coming out of this. Now was the third halt of the day. What I want you to notice is the volume that came in on the action to the downside versus the volume that came in on the action to the upside. Okay, I know it's tough to gauge because the stock halted, so you don't get consistent volume bars. But what I do want you to notice is the difference in volume on the pullback coming out of that third halt. The volume on that pullback, let me just get the Fibonacci levels out of the way because it's too many lines. I want to just make this a little bit more clear so you guys can see it better. So you see on the way up, the two halts on the way up, increasing volume. And then we halted on the way down, decreasing volume. Then we come out of what was the third halt of the day, and we pull into where? We pull right into the previous halt price, and what else is sitting there? Well, there's your trade line. So now I've got a prior halt price that lines up with my trade line. That was also a previous level of resistance on the daily chart, right around that dollar mark. I'll take you guys to the daily chart, and we can pan this all the way back. And then there is your dollar mark, which is a psychological level. Okay, there's your $1 mark. Okay, you can see here, previous brief pivot low in February, then it became resistance in early April. Okay, and not to mention that $1 is a psychological level for a small cap stock like that. Okay, so now let me put that level right back at that prior halt price. So here's your prior halt price. Now here's your trade line. Here's your decreasing volume on its pullback. I went ahead and I got long right there in front of that previous halt price with an execution of $1.11. So at $1.11, I'm long right there, looking for that previous halt price and that trade line and that dollar support level to be an area, that dollar psychological support to hold and push the stock higher. My stop loss on this trade was below $1. So there's your entry point. Okay, there's your entry point. We start to climb our way higher. My next execution, $1.21. I say we start to climb our way higher up towards at $1.21, executed at 9:59 a.m. And I took a piece off the table right here because this previous halt price started to give us a real problem. This is where the stock halted on the way down. So just as I'm saying to you, you can look for these halt prices to be support. Okay, you can also look for these halt prices to be areas of resistance. When we moved our way higher here, I was looking for this trade line to really push us back up and go. And what I was saying to myself here was the stock was really having trouble getting off of this support level. So what I really wanted to see, guys, was us get down here, test this level, and then just go. Okay, I didn't want to see us kind of mess around here. Okay, I want to see us touch the support level and go. What do we know about support levels? Okay, when a stock gets to a support level, the quicker it gets off of it, typically the stronger that support level is. So I didn't like the amount of time it was taking for the stock to get away from this support level, and we could not get back over that prior halt price. So I lightened my position. I took 25% of my position off the table at $1.21. Now, this take profit is not meant for me to really be like, ooh, this is my big money maker. I'm simply taking a piece of my position off the table on what was a very volatile stock that just moved 20% in a matter of a couple of minutes when the stock went down to $1.05, went back up to $1.25. Okay, so you're talking about a stock that's moving around very, very quickly. So I did not want to get caught in a flush down through that dollar level in my full position. Once I said, okay, we're not getting off this support level as quickly as I would like. We're also starting to stall out at this prior halt price to the upside. I'm going to lighten my position. I sold 25% of my position there at $1.21. Not to make money on this position. I want to protect now the bulk of my trade. And now I can sit in the 75% of my position and now give the trade the room and time that it needs to work itself out. I didn't get that immediate resolution that I was looking for on an extremely high volatile stock. So I lightened my position just to protect my downside. Okay. Then we actually pulled back in, tested this level again. That area held support again. Then we push our way back over. We get up over VWAP and we start to make our climb. And I take another piece of profit off the table. I'm sorry, no, that was VVPR. That's that's VVPR. Where's VIV? Okay, here's VIV. 10:29 a.m. Final take profit at $1.16. Okay, so what I'm looking for now that I've taken 25% of my position off the table, now that we got a trade line VWAP cross to the upside, we got a nice increase in volume. I'm saying to myself, my next take profit is in front of the high of the day. I actually had an order sitting right here at $1.38. And I missed it by 2 cents. The high of this move is $1.36. I had an order sitting right there. Right there was my order at $1.38, which was going to be the bulk of my position off the table. But I missed my fill there by 2 cents. And then the stock rolled back over. We broke back below the trade line. We broke below VWAP. Those two indicators were what I was looking for to create an area of support for me. So once we broke down below VWAP, I got flat at $1.16. A small gain on this trade in at 111. 25% of my position came off at 121, and the rest of my position came off at $1.16. Not anything to write home about, but really just very, 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 very disciplined risk management on this trade. And we'd be having a different conversation if the stock went 2 cents higher and I actually got my fill on the bulk of my position. This would have ended up being a much, much nicer trade if I sold half my position at $1.38. But we topped out at $1.36. Unfortunately, did not get my fill. We pulled back in, and then I ended up exiting, like I said, that last take profit, $1.16. And then the stock just completely died the rest of the day. What I want you to keep in mind with small caps lately, guys, is that the action is taking place in the first hour of the day. And after the first hour of the day, a lot of what we're seeing with a lot of these small caps, they get very exciting that first hour of the day. A lot of day traders come in, they chase them, FOMO kicks in, then the stocks die out in the afternoon, and they roll over. Do not get caught holding the bag on these trades. If you're going to be trading small caps right now in this environment, follow through, and the real good continuation is hard to come by. They're few and far between the small caps that give you the continuation and follow through. Understand that, be disciplined, take your profits off the table, abide by your stop losses, obey your stop losses. I don't want to hear a single one of you. If you are a follower of my YouTube channel, if you're a member of True Trading Group, if you follow me on Twitter, you follow us on Twitch or Facebook, you should know better than to stick to your stop losses and to not get caught bag holding. I don't want to hear any one of my THD family members saying, oh my God, I got caught. I'm still holding VIVE. I'm still holding VVPR. I'm still holding SGLD. I'm still holding any one of these small caps that have gotten themselves action in the morning, because that's all they're giving you. They're giving you action in the morning and then they're dying. Stay away from hoping and praying. Do not hold on to these positions. I don't care if it's your last day trade. Exit the trade. Exiting the trade at $1.16 versus exiting the trade at 75 cents is way more important and is way more valuable than you having another day trade to use tomorrow. Sacrifice the day trade if you're under PDT rule and save your account. Okay, too many of these traders that are bound by PDT, they hope, they pray, they hold on to these positions because they don't want to give up a day trade. They figure, what the heck, I'll sell tomorrow. Meantime, tomorrow results in a 30% loss. You cannot afford to take a loss that big, especially if you're someone that's trading with a small account and you're trying to grow that account. You simply cannot afford it. Stick to your stop loss, obey by it, stick to it. Do not get caught bag holding. That's what I'm going to say while we go into this VIVE trade. Next, we're going to talk about does anybody have any questions real quick before I move on to VVPR? Does anybody have any questions about VIVE, about the trade breakdown I just went over with you? Does anybody have any questions about that before I move on to VVPR? Chris W says, what do you set as your stop loss? Okay, that concerns me. That question concerns me because I know that you're setting stop losses incorrectly. Everyone listen up. Okay? Everyone listen up. Your stop loss is not to be some arbitrary percentage. Okay? You're not just going to say, oh, I'm going to set my stop loss at 4% or 5%. That's not the way to set your stop loss. The way for you to set your stop loss is based on the chart and the pattern that you're trading. I don't care where you enter the trade. Okay? But if I go back now, let's go back to this. Okay? So now let's say here's VIVE. On the setup of VIVE, what did we talk about? I talked about the pattern I'm trading is the previous haul price lining up with the trade line, lining up with support on the daily chart to create an area of support. So I'm a buyer in front of this level. This line drawn across my screen, I'm a buyer. Now, I don't care if you buy the stock here, 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 or here. Actually, let me go back. It's going to be back here. I don't care if you buy the stock anywhere in these four squares. Four squares, four completely different prices. Guess what? Your stop loss in all of those situations are going to be beneath this support level. You set your stop loss based on the pattern that you are trading. When you identify a setup, you are going to say to yourself, what is the level that if the stock gets below, the setup I'm looking at is no more? Well, I know that I'm looking at this $1.05 area to be support. So if the stock breaks that level, then the pattern I'm looking at is no more. I will then at that point exit my position. You are not setting your stop loss randomly based on a percentage. That is how you will end up entering the trade here at $1.20, arbitrarily selecting $1.10 as your stop loss. And guess what, folks? You get stopped out right there. And then you say, Mike, I always get stopped out and the stock continues higher without me. Why? How? I have such bad luck. This always happens to me. It's always happening to you because your stop loss is in the wrong place. And the reason why your stop loss is in the wrong place is because you are moving your stop loss and keeping a stagnant position size when the exact opposite needs to be done. Your position size should vary every single trade. If you say to me, Mike, I trade with $2,000 position size, I'm like, that's great, you're doing it wrong. Traders that ask me, Mike, what's your position size? Nope, you're doing it wrong because I can have a $10,000 position size or a $500,000 position size and still risk the exact same dollar amount. I can get into a large cap trade in a stock like Apple or Chipotle or any large cap. Okay, I can get into any large cap trade with a $500,000 position, and my stop loss could be, where I'm risking 1%, depending on where my stop loss is on the setup, and you lose $5,000 on that trade. Then I can enter a $10,000 SPY option trade, and my stop loss is like 50% on that trade because that's how high the risk is on that trade, and I'm still risking the same $5,000 with $10,000 versus $500,000 position size. Completely different position size, same risk. You need to identify your risk tolerance. What's the dollar amount you're comfortable risking per trade and stick to it. So if you buy a stock at $5 and you say, okay, let's say this example, let's use this example because it's right in front of us. The support level is $1.05. I didn't mean to delete that. There it is. The support level is $1.05. We can all agree the support level is $1.05. So if you buy this stock in front of $1.05, the pattern is still intact. Okay, whether you buy the stock here or you buy the stock here, your stop loss still needs to be below the support level at $1.05. because that's the level that if the stock breaks, the pattern is no more. Now, I can buy this stock at $1.18, or I can buy it at $1.09. No matter where I buy that stock, my stop loss would still be below $1.05. But my position size is going to be extremely different if I enter the trade at $1.18 or $1.09. Because if you say to yourself right now, ask yourself, what's my risk tolerance? What's the dollar amount I'm comfortable risking per trade? Now, let's say for you, random number, I'm just picking a number. Let's say for you, $500. That's the number you're comfortable risking per trade. If that's the case, and you buy this stock at $1.18 and your stop loss is at $1, you need to calculate how much position size do you need at $1.18 so that if you get stopped out at $1, you lose $500. And then if you enter the stock at $1.09, your stop loss is still $1. Now you say, well, how much position size do I enter at $1.09 so that if I get stopped out at $1, I lose $500? Let's say you enter the trade at $1.13. Your stop loss is still $1. How much position size do you need to buy at $1.13? So if you get stopped out at $1, you lose $500. That's the proper way to set stop losses. A lot of traders do this wrong, and they just say no matter where they buy the stock at 118, at 109, at 113, they're going to buy $2,000 worth. No matter what price they buy it at. And they're going to say, I'm okay risking 5%. And they set their stop loss at 5%. Well, 5% from $1.18, you're going to get stopped out and the 105 support level is going to hold. 5% from $1.13, you're going to get stopped out. That support level is going to hold. It's going to continue higher. The only situation where you're going to buy that position and stay in it, if your stop loss is 5%, is if you buy that stock at like 106, 107, 108. That's the only way you're going to stay in this trade. Otherwise, each and every single one of you that set your stop loss that way, you all got stopped out of this trade. Meanwhile, I'm in it. This is something that inexperienced traders make the mistake of all the time. But now that you guys are receiving a professional education, you know better. That's the proper way to set stop losses. I hope that makes sense to everybody. With that said, I'm going to move on now to VVPR. Okay, VVPR was where I made my money today. Okay, VVPR, really got my attention once it got over VWAP. Okay, it got over VWAP. You really start to get a nice, strong increase in volume. Okay, real nice, strong increase in volume, the heaviest volume of the day once the stock broke through that initial morning high. Okay, so the stock breaks through your initial morning high. Okay, we draw out our Fibonacci retracement levels, and what do we notice? Okay, we notice that after breaking through the initial morning high on the heaviest volume of the day, we not only got a trade line VWAP crossover, first one of the day, that's the most powerful, and now we have VWAP lining up with your 38.2 Fibonacci retracement level. And on this pullback is where I got long. I'll go to my exact fill. $4.82. Right there. $4.82. There's my entry point right there, $4.82. Now, what I'm looking at here, guys, is this support level of VWAP and the 38.2 Fibonacci retracement level. That was my stop loss on this trade. So the trade alert is long VVPR 482, stop loss 460 area. The reason why 460 area is my stop loss is because of this 38.2 Fibonacci level lining up with VWAP. And there it actually pulled in, held support beautifully, and then start to push and climb our way higher. Okay? As we start to push and climb our way higher, I take 25% of my position off the table right there in front of that high as volume starts to then increase again. This was kind of a wacky trade because the volume profile on this stock was far, far, far from ideal. And this is why I started peeling profits off the way that I did. So there's your initial entry at $4.82. There's your support at VWAP and your 38.2 fib level. We got a nice strong increase in volume. And I really thought that after that increase in volume, I really felt we should have broken through the high of the day. That was an excellent increase in volume. That should have been enough to take us through highs. And when it didn't, that started to concern me a little bit. Okay. We then pull ourselves back in. And this is the example where if you guys are trading your P&L, you may exit this trade prematurely because we ended up pulling back in and testing this VWAP area again. And a lot of people may stop out on that position. But because I took 25% of my position off the table for a profit, it makes holding through this pullback very easy for me because I'm not worried. I'm not panicking. I already took some profit off the table. I've also reduced my position size. So now my risk on the back end of the trade, even if the stock did that, I'm only in 75% of my position. So my risk is now much smaller, not to mention the profit I already pulled off the table. Okay. So now that's why I take that first piece off the table because it makes it easy now for me to hold on and stay in the trade, even when we get jigs and jags and little slight pullbacks. Okay. So we ended up holding together. We push up again and we go up and we test that high of the day again. Now the reason why I now took profit again in front of the high was because now we're getting close to lunchtime. Okay. Now it's 11:50. Okay. We're getting close to lunchtime. All right. And I took a piece of profit again off the table there in front of the high of the day at the fill, $5.30. Then we broke through the high of the day. We extended a little bit higher. I took another piece of profit off the table at $5.48. And then now I'm down to one last small piece of this position. And I'm saying if this trade line holds and pushes us up towards 6, I was really looking for this stock to get itself up towards 6. I'll take you guys to the daily chart. I really wanted us to get up and test this previous pivot high that's over $6. I thought we had a chance to get there today. Okay, and that's why I was holding on to a piece of the position. And then right here was the signal, right there. A clean double top during middle of lunchtime at 12:30 with a high volume rejection. And that was my sign. It's time to get out of this trade. And once I saw that, that is when I took my final profit off the table right there at final fill. $5.20 at 12:30 p.m. is your final fill. Okay, so here's your entry, first take, second take, third take, and there's your final exit after the failed lunchtime breakout. Okay, that failed lunchtime breakout. You guys always be careful and conscious of those failed lunchtime breakouts. Okay, now with that said, does anybody have any questions about the VVPR trade? How do I see VVPR tomorrow? I see it's a dead duck. It's not something I'm looking at for tomorrow. Not something I'm looking at for tomorrow. And I hope you're not asking me that question because you're still holding your position. David Wong, will you trade it again? I mean, not unless there's some type of catalyst tomorrow. Not unless there's some type of catalyst tomorrow. But if the stock just opens at $4 or wherever it is now, I'm not trading it. No. How do you best go about setting and actually following through on mental stops?
Sounds like bag holder quotes.
Good question. How do you best go about setting and actually following through on mental stops? Do you wait as it hovers around your stop loss versus selling right when it dips quickly to that level? No, the reason why I use mental stops, I want to see how the stock reacts when it gets to my stop loss area. Yes, Charles Zofke, I am using hotkeys. Yes, I am using hotkeys. Anyone that's trading real fast moving small caps like this, you should be using hotkeys. It's for your own safety, honestly, and protection. Okay. I'm disciplined enough to stick to my mental stops. I prefer mental stops, but I'm managing my position in real time. If you're not disciplined enough to stick to mental stops, you guys got to use physical hard stops. Okay. I like to, now if I say my stop loss is like the 460 area, I'm not exiting my position the second it prints 460. Okay. If the stock gets to 460, 459, whatever it is, I want to see how's the stock react. When it gets to 460, 458, 459, does it pop right back to 470, or does it just sit there? Like, does it go from 458 to 462, back to 458, 463, 457, 460, 457, 460, and I'm like, okay, there's no buying pressure here. I'm out of this trade, and I'll get out at 458, 457, 456, whatever it is. Okay, I'm not actually exiting the second that it prints 460. But if you're not disciplined enough to actually follow that and exit the trade when that happens, then I suggest you guys just use the physical hard stops. All right. Guys, was that helpful? Were these trade breakdowns helpful on VVPR and VIVE? Was this helpful to you guys? I use Lightspeed, Ben. Nah, Maricela, I'm not looking at VIVE for tomorrow. I don't, VIVE was a complete dog at the end of the day. It's not something I'm looking at for tomorrow, no. Good, guys. I'm glad. I'm really glad that was helpful. That was helpful for you guys. What I want to do now is, how many of you are on this live stream right now, guys? How many of you on all social media platforms, whether you're on Twitter, Facebook, YouTube, Twitch, how many of you are not TTG members? How many of you are not TTG members? Just a quick show of hands. How many of you are not a member of True Trading Group? Mary John, a hotkey is where you can buy or sell a stock by just pushing a button on your keyboard. All right, Deister, Rob Roberts, Suman, Brian, Fancy, Charles Zofke, Reynard, The Magician, Robert, Amber, Tyler, Grasher, Atal. AJ says not yet. I like it. Mark Cause, John P. Emmanuel, Mike Lewis, Edward Locke, Berlocki, sorry. Shane Williams, Steve Fox. Okay, guys. Good. All right, so we have a lot of King. All right, King, what's up? So guys, we have a lot of people here that are not yet Devlin. We have a lot of people here that are not yet TTG members. What I want to actually tell you guys real quickly, for those of you that are not a TTG member, if you guys are finding value from just these trade breakdowns, I want to make sure that you guys are aware of our TTG3 program, where you can all join and TTG for a 7-day trial period. Okay. If any of you that are not yet TTG members and you want to experience what it's like to be part of True Trading Group, we have a program called TTG3, where for just $3, a one-time payment of just $3, you guys get access to a full day in our live chat room where you see my screen and hear me on the microphone breaking down my analysis with all our real-time trade alerts. But you also get access to 3 courses. I have put together 3 courses that I think are guaranteed to help make you a better trader. These are 3 courses that are not part of the TTG curriculum that's on the website. These are 3 courses that I put together specifically for this TTG3 platform that is filled with 3 courses, multiple chapters in each course that I think are some of the major crucial topics that are important to helping you become a consistently profitable trader. You get 3 of those courses. Okay, 3 of those courses, guys. You also get access to the member dashboard for 7 days. You will get access to the TTG member dashboard for 7 days, get access to our chat room live for the whole day, for 1 day, get those 3 courses, and you also get access to our due diligence tool, which is the stock profile tool, which has all the due diligence information on any company you can possibly ever want. If you're interested in Tesla, Roku, AMD, Boeing, Carnival Cruise, American Airlines, whatever it is, you can type in that company, get a downloadable PDF report with all the relevant stock information on that company, as well as a compilation of all your analyst ratings for that particular stock. So if there's 20 different analysts that cover a particular company, okay, we will compile all that information for you and show you how many have a strong buy, hold, moderate sell, strong sell. So that can help you making your investment and your trading decisions. And you guys get to navigate the entire TeachD member dashboard. Some of the resources and tools are locked for TeachD members only, but as a guest on our 7-day trial period, you guys can navigate that member dashboard and get a look for all the tools and resources that are part of the TeachD membership. Okay. So because our membership, TTD is not just about the trading chat room. The chat room is friggin' awesome. You have me, the Wolf, Jason Simmons, Alex Campbell, Jay Downing, Chris Toner, all the other TTD moderators. We are all calling out our trades live in chat. I'm on the microphone. The Wolf is on the microphone. We're telling you guys what we're doing before we do it. I always tell members what I'm buying before I buy it, where I'm buying before I buy it, where I'm selling before I sell it. I tell you guys every time what I'm doing beforehand. So with the TeachD3 trial access for the $3 one-time payment, not reoccurring, it's a one-time $3 payment. You get a full day in our chat room any day of the week, Monday through Friday, whichever day works for you and fits your schedule. You choose whatever day you want to come into our chat room for free. You get access to those 3 courses that I put together specifically for you that I think are crucial lessons to help you become consistently profitable traders. If you think the lessons I just went over right now on these trade recaps was good, guys are going to be floored when you see the education that I give you for just that $3 7-day trial period. The courses that are on the site is 3% of the entire TGD curriculum, but I'm confident that as soon as you go through those 3 courses, you are going to be I guarantee you are going to learn more in those 3 courses than you've probably learned in the last year and a half of your trading if you're a new inexperienced trader. Now, if you're a trader that's experienced, you've been trading for 20 years, obviously you guys have a lot more experience, have a lot more education. But if you're a new or inexperienced trader, I guarantee you those 3 courses, you're going to get more lessons, you're going to get more education, you're going to feel more confident about your trading skills than you've probably had over the last entire year. Okay, that's how confident I am in the courses that I put together for you guys. Okay, so each one of those courses has a quiz at the end. You guys want to take that quiz, you get an 85% or higher, you earn a badge for that particular course. You earn a badge for all 3 of those courses. You guys might just unlock some special perks if you decide to join the TeachD family. When your 7-day trial membership is going on, you can upgrade to a regular membership at any time, but you're not obligated at all whatsoever. It's a one-time payment of $3, no obligation, it just expires, that's it. But if you want to upgrade to a full-time TeachD membership, you can do so. I always tell people, like, you guys would never buy a car if you weren't allowed to test drive it first. You would never, ladies, you would never buy, an article of clothing. Men, you'd never buy a suit if you couldn't try it on first. You would never have someone babysit your kids if you didn't get to interview them first. Okay, so like we feel the exact same way, which is why we have the TeachD3 platform, so you could try out the TeachD platform for a full 7 days and answer for yourself, is TTG right for you? You get to answer that question on your own by going through that platform, taking our courses, coming into chat, and you guys can make that decision once you guys get to experience what it's like to be part of the TTG fam and go through our platform. Okay, so guys, real quick, yes, Amber Reed, this is all for $3. Guys, literally, for $3. I'm not kidding you. For a one-time payment of $3, you get 1 full day in our live chat room. You get 3 courses that I put together specifically that I think will help you become a better trader. And you get access to our stock profile tool. And you get access to our trade history. So when you guys go into our TGG member dashboard, you can actually see our trade history. All the moderators in chat, myself, the Wolf, Alex Campbell, Chris Toner, Jay Downing, you can see all of our trade history. Right now, collectively, us 5 moderators over the last month and a half, collectively as a room, we're sporting an 80% accuracy rating. All of us combined together. Okay. All of our accuracies combined together, we're sporting an 80% accuracy. You can go through that trade history and see all of those trades for yourself. All of this for $3. And during that 7-day trial period, if you guys want to go ahead and join TTG full time, you can do so. If not, you're under no obligation. You just let your thing expire. Okay? That's our TTG3 platform. For those of you that are TTG members, if you are a TTG member, do you guys think all of our guests on here today should try the TTG3 platform? Do you guys think it's worth it for them to give TTG that 7-day trial test run for $3? You guys think that being in chat with us for the full day and getting all of our courses, seeing the trade history, and getting to use the stock profile tool, do you guys think that they should do it? Guys, don't take it from me. Take it from our TTG members. They'll be the ones to tell you if they think it's worth it or not. Okay? So again, we're going to post that link again here in chat. You guys, okay, we'll post that again here in chat. You guys just click on that link. It'll take you to the TTG3 platform. One-time payment for $3. You get to try out the TTG platform for 7 days and decide, is TTG right for you? The reason why I do this is because I'm so confident in our platform. I'm so confident in the education that is all you need is 1 or 2 days. You don't even need 7 days. That's how confident I am in this platform, that within the first 2 days, you spend a day with us in chat, you go through those courses, you're done. You're booked, you're sold. You say TTG is my home, because I guarantee you that you are going to learn more in 1 day in chat and on those 3 courses than you have learned in your past year trying to figure this out on your own, looking at YouTube videos, taking other courses. That's how confident we are in the platform, that I think you guys are going to love. The platform speaks for itself. That's why I do this now. I want you guys to be able to come in, experience what our platform is like, see the resources and tools at your fingertips so you can decide if TTG is right for you. Okay? Click on that link we've just posted in chat. Sign up for TTG3 for just simply $3. All right? Does anybody have any questions about TTG3 before we move on? Does anybody have any questions about TTG3?
Guys, please ask questions.
Yes. Rajandran Thevar says, any option experts in the chat room? I need advice. We have Jason the Wolf Spatafora, who is is a fantastic options trader. Okay, one of the better option traders that I know. We also have Chris Toner. Chris Toner has 25 years experience trading options, over 2 decades of experience trading options. So yes, we do have option specialists and option experts in that can help you guys with your trading. I also do trade options, but I also do trade stocks as well. Oh, guys, there you go. Christopher McGowan. Christopher McGowan says, guys, TTG is the 5th chat group that I have joined, and trust me, it is head and shoulders above any other. There it is right there. You know, there it is right there. I mean, guys, and like I said, you don't want to make the commitment right up front. You guys get to try it out for just $3.
Guys, if you sign up now, I'll shave my head.
Ooh. Uh-oh. Uh-oh. All right, guys. Well, here we go. All right, guys. Well, now that we are done with our
what do you guys think, Mr. T?
Huh?
Mr. T? So wait, it would be Mohawk and then...
Yeah, let's do it. Yeah, guys, exactly. Yes, Mr. Rosser. Yes, it's okay, Mr. Rosser. It's $3 to sign up for our TTG3 trial program. So you get to try the TTG platform for 7 days. Those 7 days, you get to pick one day to come into our chat room any day of the week. Okay. You get to come into our chat room for one day, any day of the week, whatever fits your schedule. You also get access to 3 courses that I put together myself that I think are guaranteed to help make you a better trader. You also get access to our trade history, so you can see the history of all the trades that all the professional moderators have called out in chat. Okay. The time they enter, the time they exit, you get to see all of that. You also get access to our stock profile tool that has a compilation of analyst ratings on every single stock that's there. Okay. That's what you get access to for just $3. One-time payment, not reoccurring. It's one time, $3. And then you can, at any point during that trial period, you can upgrade your membership to a full-time membership. Okay. You can upgrade at any time to a full-time membership. All right. That's what the TTG3 platform is. All right. So again, guys, click on that link that we posted there in chat. And that is how, if you guys want to join TTG3 and give us a shot for that 7-day trial period. Okay. Now, with that said, it's showtime, baby. We've got some shaving to do. Yes. So, guys,
Okay, guys. First,
for those of you that aren't aware, the Wolf lost the bet. It's shaving time. He's going to shave his head right here live now for each and every single one of you to witness it live.
Okay, caveat, guys. Nobody took a inverse to the bet. So basically, I just made a bet off of my own ego. So as a means to, well, one, if I lose a bet, I don't welch. That's just not what I do. Usually I bet towards charities. Guys, this is the 8th bet like this that 8th time I've made this type of bet. I've lost twice. All right. So not bad, but nobody takes the inverse. So we're not going to get into the trade. I said it would go 50%. It ended up being the first time that I've traded this particular equity in the last year and lost. You know, my trade stats are still off the charts, guys. 49 trades and 19 losses. I'll take that any day. So anyway, no, I'm not cutting my eyebrows. You cut your eyebrows. This is so awful. All right. You guys ready? Guys, if you're watching this on YouTube, can you hit that like button? Subscribe. Maybe one day I'll shave an eyebrow. Fuck, man. Fuck. Oh, it's so hard to do when you're not looking.
Oh, there he goes.
Hold on. Yes?
Yes.
I'm a little busy, Adam. I gotta go. There's no clip on it. Look. Goodbye.
I mean, you could have put a clip on it.
Micromanaging Adam's like, there's no clip. What? Guys, does that look good?
I mean, you could have put a clip on it. It's too late now.
There's no clip.
Well, you could have put one on.
Why put a clip on it?
All right, let's do it. It's your head. Go for it, man. Go for it.
Guys, I'm a pure... I want to...
Guys, welcome to TTG, baby. It doesn't get better than this. Welcome to the TTG family. This is how we roll.
Oh my God, I'm like, ha! All right, let's take a little off the sides.
Does your wife know you're doing this?
What's up?
Does your wife know you're doing it?
Oops.
No.
Dude, I don't got any parties to go to.
This is true.
Guys, how's the back look?
It actually looks like a lightning bolt. It looks like the flash lightning bolt. Guys, honestly, if this isn't honestly, this alone is reason to join True Trading Crew. Accountability, ladies and gentlemen, accountability, staying true to his bets.
I guess do the middle, huh? You guys ready for the middle?
I would leave it. I like it. I would leave the middle.
Yeah. Jesus Christ. So, guys, there's a lesson here.
Give him a lesson, Jason, while you're shaving your head.
The lesson is don't shave your head and say you're going to shave your head unless somebody else takes the bet. Make it worth it. Jesus. That looked ridiculous. Guys, the last time I did this, I didn't do this. Tyson Beckford shaved my head.
Yeah, last time Tyson Beckford shaved it for you.
Yeah, Tyson Beckford shaved my head the last time.
Guys, this is easily worth like a $10 tip on OnlyFans. Adam Stewart says that.
All right, let's get some of this back. Guys, I hope you guys are taking screenshots.
Yeah, I'm taking a picture actually.
Is Danielle watching this?
No, she's not. I should call her in here.
Yeah, I put a towel down. I don't think that's going to help much.
Nah, I don't think so.
It's all right. I brought a broom, a dustpan. I'm like so afraid. I keep getting really close to my eyebrow.
Yeah, don't do that. Everyone's that guy. So yeah, he made a bet about a particular trade that he thought was going to go up 50%, and it didn't. So he lost the bet, and he said he was going to shave his head. That was the bet, guys. That was the bet.
I look pretty cool, like De Niro in Taxi Driver. Okay, guys, keep the mohawk or lose the mohawk. I mean, I look ridiculous.
You do look a little.
I think I could be a barber. What do you guys think?
Yeah, I think you did a good job.
All right.
Mr. Swagger said, "Yo, dude, it actually looks dope." Emmanuel too goes low key wolf. It actually looks cool. People actually like it.
Yeah. All right.
I rock it out for a little bit, man.
Yeah, man. I'll rock it out.
You're not going anywhere.
No. So the last time when I did this before, my son was scared of me. He didn't know who I was. So also the last time so the reason I have all this True Leave gear is Kim Rivers, the CEO of True Leave, sent all this stuff to me. just in case my head gets cold.
Wait, well, hold on, guys. Everybody, wait, hold on. Take your hat back off. Everybody right now on the stream, everybody take a screenshot right now of the Wolf of Weed Street. Screenshot it right now. Post this on Twitter and tag at True Trading Group and tag the Wolf of Weed Street. Okay?
Hold on. Just so I don't scare people. I got my Stormtrooper mask. Dude, I think I look pretty badass.
Everybody right now take a screenshot and tag us on Twitter at True Trading Group and at Wolf of Weed Street, guys. Everybody right now take a screenshot. Let's make this go viral, guys. Come on. Come on. No, Cannon Bear, do it. Yes. Oh, Glenny Trades. You know Glenny Trades is coming strong with the screenshots in chat tomorrow.
Yeah.
You know it.
Wow, I kind of like it.
I like it.
Hold on.
Oh, there you go. It looks nice, man. I gotta tell you, it doesn't look bad.
I'm very versatile.
Yeah, I don't mind it. I don't mind it.
I mean, look like a fucking rooster.
Yeah, it looks like a shark fin.
I'm like Yondu from Guardians of the Galaxy.
Yes. Yeah, I like that. You are Yondu.
Yondu.
I love it. Guys, listen. If this hasn't entertained you enough, this is TTG, baby. This is what being part of the family is all about. All of our TG members, you guys already probably knew this was coming. For those of you that are not yet part of the TG fam, you can try us out for $3. You guys get access to our chat room live for one entire day, any day of the week that you prefer, that works for your schedule. You guys get access to our stock profile due diligence resource tool. You get access to all of our trade history, and you guys also get access to the 3 courses that I put together that I think are guaranteed to help make you a better trader, all for just $3, a one-time payment of $3 for a 7-day trial period. And then at any point during that trial period, you guys want to upgrade to a full 1-year membership, you can do so, but you are under no obligation to do so whatsoever. Okay? So guys, take advantage of that trial period. Look at me taking a selfie.
I'm looking at the back of my head.
Oh, he's looking at the back of his head. Take advantage of it, guys. We're going to post that link in chat here one more time. Take advantage. Okay, guys, again, take advantage of the TTG3 trial program. It is a one-time $3 payment. You get to try us out for 7 days and answer yourself this question. Is TTG right for you? How do I know TTG is different from all the other scam bullshit that's out there? Well, enough said. You don't have to think about it anymore. You can try it out for 7 days for yourself for just $3 and then decide if TTG is right for you. All right? So that's it, guys.
Let me just say something. TTG stands for integrity, okay?
TTG does stand for integrity.
Make bets. You're accountable, okay? If I say something, guys, I'm not the wolf for nothing, right? You don't call you the wolf because, you're a pansy.
He's so sad.
But
guys, look, I'm not shaving my head.
Yeah, because your hair might not grow back.
What? I got a full head of hair, bro. What do you mean?
You never know until you shave it.
What? I mean, come on, look at this. Look at this hair.
You do have pretty thick hair.
Yeah,
you
man.
should shave your arms. You look like a Yeti.
Look at this. Full head of hair, man. I'm not shaving that. All right, guys. TTG stands for integrity, baby. That's what we're all about here today.
Integrity.
Guys, Take advantage of this $3 trial program. Trust me, it's going to be the best decision that you've ever made for your financial, future. Joining the Teachy family, getting a professional education, being part of a support staff and group that is all about integrity. You guys, J. Eric Castro, my man, just signed up with a lifetime membership. Yes, J. Eric Castro, welcome, baby. I love it. I love it. That lifetime membership, I love it. Good stuff. Great stuff. All right, guys. So that's it, gang. That's it for our live stream here tonight. I hope you guys enjoyed the trade recaps on VIVE, VVPR, and of course, I hope you enjoyed the Wolf, Jason Spatafora, the man, the myth, the legend, shaving his head live on this stream for you guys. If you have not done so already, come on, guys. The guy liked this video. How could you not like this video by now? Guys, like this video, share it, subscribe to the channel if you are brand new. Make sure to turn on your notification bell if you guys are on YouTube. Make sure you don't miss out on any more of these live streams. We always have a blast. Take care, everybody. It was real. The Wolf, you're the man, bro. Sticking to it. I respect the hell out of you. The Wolf made a bet. He stuck to it. He shaved his head. He didn't want to do it. His wife is going to kick his ass as soon as we get off this live stream. But that is a man of integrity. Wolf, much respect to you, my brother. I will see you in chat tomorrow. My THD members, I'll see all of you in chat tomorrow. And we're going to see how we're going to kick some ass and take some names tomorrow together as a family. I'll see you guys all later. Peace. Have a good night, guys. We're out.